Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go, generally related to wealth building, financial topics, and or commodities. Let's dive in. Let's see what people are talking about. If you want to follow me, it's at finding_finance. And if you want to join our community, finding-value.com, that's where I dive deeper into individual companies and sectors. You can kind of see how I'm positioning in the commodity space and what I'm buying. We do have a discount coupon code going on called Mayday, Mayday. See in the description link below. So the FI couple says the real estate market is on fire right now. We see multiple offers, people paying above asking and not caring at all about the 7.5% interest rates. Not sure when prices will come down again. And that's what I've heard in my observations in the market that I'm in. When houses go for sale around my area and where I do my walks, they are sold definitely less than a month, but most of them are sold, I would say, between a week or two. That's probably about all I see them up for, and then the for sale sign gets taken down. Maybe they're only up for a day or two, and they just leave the sign up for a couple of weeks. But I think that the housing market, at least where I'm at, and what I've seen on Twitter, is still pretty strong. And I know others have posted other data like Tennessee and Austin with increasing active inventory. And that very well could be the case. And maybe inventories are normalizing in some of the markets across the United States. We've got the Sprot Uranium Trust on a much larger, bigger picture view for 23 and 24. And we've got this kind of consolidation that's going on into the tip here. And we're about to see a decision point coming up. What's good is we've got a lot of support where we're at. That's where all those shares are traded. And we can maybe pop out of this thing to the upside. Now, I'm favoring the upside. Doesn't mean I'll be right. And the reason I'm favoring the upside is because of the inflationary conditions that we have. Is there a potential slowdown in the market that could drag this lower? We could get one. Yeah, it's possible. And that's where taking a longer term mindset is very valuable, and just being patient to wait for these things to play out. We have a lot of alignments in the market right now that also occurred during uranium bull markets. But we are at the beginning stages of those bull markets. We also have bottoming patterns that have broken to the upside for a lot of the individual uranium stocks. So although the Sprott Uranium Trust is consolidating and potentially could break out, we've got that confluence of information behind it where things are at the beginning of a commodity bull market move. And there's a lot of information that I won't go and dive into that supports that opinion. Can platinum go to $4,000? You betcha. So if we look here, and this is some of that supporting evidence that I look for, guys. I'm looking for supporting evidence for a potential bull market in commodities. And in an inflationary move, platinum does very well. Last bull market, the bull market started in this squeeze up in the corner here. That was in 98, 99 was where the commodity to stock ratio bottomed and commodities started to outperform. Now here is something to think about. This fractal here, if you look real close, is the same fractal as this here. This point is this point, and then we have this squeeze up in the corner here, which is all this. I think we're at the beginning of a commodity bull market, and platinum generally leads this bull market. I think we're right at the beginning of it. And we are earlier than what I even have thought. And why do I think that we're very early in a commodity bull market? Well, we've got this pattern here, which is the same fractal. This fractal is the same fractal as this fractal here. And I thought for some reason, when I was looking at a lot of this, I thought this was going to be the breakout in 2020 to 2021, but it's not. And the reason I think it's not, And I think that we just had a stimulus movement through the system, which caused inflation. And now that's kind of like the stimulus overhang behind it. It's because platinum hasn't broken out and the fractal is the same as this one as 98.99, which puts us right at the beginning of a commodity bull market. Now, we haven't started because it hasn't broken out yet. We might get a slowdown before the breakout. How big's the slowdown? Not exactly sure. And this is how I'm placing us in the cycle by this. Technology stocks are still booming. In 2000, that is when the technology stocks rolled over. It was 2000, 2001. I think they're going to roll over here. I think we're real close to that beginning of the commodity bull market and tech underperformance. Tech also underperformed in an increasing interest rate environment in the 1970s. So this hasn't broken out. It's got the same fractal right at the beginning of the last bull market. We have technology stocks, which are also still kind of in a topping process phase. And then we've got gold and silver, which have broken to the upside, which also might mean that we have to cycle the yield curve back down before going up. Those are all possibilities. I think we're early, and when this starts to run, we have really good entry points all across the board, across commodities. And what you really need to do, I think, in my opinion, is to have that conviction and that the comfortness knowing that you're that early and you've got really good entry points on a lot of things. We also have bottoming patterns, inverted head and shoulders still playing out and ready to break out in a lot of the oil space. And we've broken that big pattern and are sitting on top of it. We are sitting on top of the breakout for oil, which is also another inflation sensitive asset like platinum. So a lot of things are aligning, and it all points to the beginning of a commodity bull market that's about to take off. And I know people get very frustrated. They're not patient enough for this to kind of wait and play out. Now, a lot of it has moved quite a bit off the bottom if you've been in the commodity space for a little while. I played the bottom of the oil bull market and stuff, and my annualized return for the past 5 years at the beginning of 2024 was 41% per year for the last 5 years. And I was lucky enough to buy a lot of stock in the bottom of 2020, I would say September, October, November of 2020. I purchased a lot in uranium and a lot in oil and nat gas and all those companies. And that really helped me in 2020 and 2021, that 5-year return. But I still don't think we've broken out into a full-on commodity bull market. And platinum is probably one of the cheapest assets out there. But yeah, he has a projection of $4,000. That's my conservative projection as well, $4 to $5 grand. Gary Savage says there's a pretty decent chance that stocks have finished the B wave, bounce, and are ready to start a C wave correction down into the final intermediate cycle low over the next several weeks. If we start to transition into a crash scenario that produces the 4 cycle low, then the selling pressure will become massive and everything will be infected. If this materializes and we heeded my warnings and locked up profits in other sectors, along with stocks, you'll be very glad you did. Tomorrow will probably be the tell. If the selling intensifies and the S&P breaks below the April 19th low, then it will be game on. So what he's basically saying is that this is an intermediate top. We've got an A, B, C correction, and we could come and pull back quite more substantially in the S&P 500 or the S&P 500 and NASDAQ. So get ready for it, and we'll see if that follow-through occurs today. Bitcoin is hanging in mid-air here, so there isn't much support, and it could easily drop down to the low 50s as a possibility. We've got Money Guy Show. He says, you can only pick two. What would you choose? A 6% 401k match, $1,000 HSA contribution, a 3% raise, a 5% bonus. Well, I would probably pick. So when you get a raise, your bonus and your match are indexed off of that, but they're usually a comparative. So I would rather get a 401k match and a 5% bonus, and your merit increase or your raise is determined by me. Almost everybody gets a raise, or you can negotiate a raise. $1,000 HSA contributions really not going to be that much money, because 6% of a larger amount of money, you'll get more money. So I'd rather get the 401k match and the 5% bonus, and then my performance and negotiation would determine my raise. And $1,000 HSA contribution isn't as valuable as a 6% match and a 5% bonus. Japan fighting inflation with QE, kamikaze policy there. That's kind of like, I read another thing where they were talking about the Inflation Reduction Act, that they needed to pull back on that because it was causing too much inflation. I just thought that was funny on one of the posts that I was reading earlier. Here's Dove. Is this the Biden administration's new plan to WTI prices and to keep West Texas Intermediate prices in check? Every morning before the market opened, they sell paper contracts, driving the price down. This scenario is happening on a fairly regular basis now. That was also occurring in gold. There's the sell-off in the morning. Now, I don't know. Maybe it is. Maybe it isn't. It's tough to say. Oil prices clearly shows inflation is out of control. Just look at its performance over different time frames. 0% over 6 months, 12 months, 28 months, 10 years, 16 years. That's not what we're playing, though. What we're playing is the bottom to top of a commodity bull market. And we're in a commodity bull market. It's broken out of its descending consolidation pattern, the falling wedge. We're sitting on top of the pattern. So you can make a lot of money on commodities or even stocks if you hold them for certain periods of time. It doesn't have to go up like you're investing in it 6 months, 12 months, 28 months. You want to buy at a very low price that's undervalued and sell it when it becomes very overvalued. That's how you make all the money. Christine says, I've never pretended to be a rocket scientist, but I can spot a trend. Oil prices should climb higher when folks realize the U.S. is no longer growing production and is weaker in its ability to ramp up further than it has been since pre-COVID days. So we've got the Duke Bank, which is basically rolled on down. And then we've got production, which is the green line here, that's kind of rolling over. And we'll see if it rolls over. I'm not too quick to say that something's rolled over. I'm just going to be patient and watch it. It says U.S. oil production looks like it's peaked around October of last year. 2024 may be the first year in ages there is no increase in U.S. oil production to satisfy an increase in demand. And that is what I'm watching right there. It's a big one to watch. Warren Pies says, in the 4 years ending in December of 2023, cumulative deficit spending equals 9.1 trillion. Cumulative additional GDP created was 9.4 trillion. The bottom line here is post-2019, deficit spending has been the dominant factor driving the economy. This is not an efficient way to grow. And that's that fiscal dominance, deficit spending. Brandon says, look at those outflows in commodity ETFs. I think there will be a massive reflexivity play here. We're approaching supply crisis in multiple metals from electrification, military, and bans. Funds will then inevitably chase performance. One of the things that also is going to help the performance of commodities is when technology stocks and the overall stock market underperforms. It'll force people to basically sell, just like bonds are underperforming as well. So we're looking for forced selling and money rotation in the system. And that occurs, like in the 1970s, we had tech underperform and commodities and precious metals outperform in that era. I think something similar will come soon. Investors still don't get that stagflation is bullish for gold and bearish for the dollar. Yes, inflation is getting worse, but a weakening economy stops the Fed from doing anything about it. Inflation will spiral out of control as stimulative Fed policy stokes its fire. And this is the conundrum that they're in, the Federal Reserve. And I agree with Peter here. It's a really good observation and comment about history. What is dangerous about stagflation is you get inflation into the system, and then what can they do about it? If the economy weakens, the way that they generally spur economic growth is through lowering interest rates. But what are they going to do? Lower interest rates when you've got a lot of inflation in the system to save the economy, which means inflation could get worse if they lower the interest rates. So how do they handle that? They can't increase interest rates to control inflation because the economy is weak. They would just send the economy into a tailspin, and that's the conundrum they're in at this time. It says if you have $1 million in investments compounding while making around $100,000, would you keep saving part of your paycheck or just let the compounding be enough? Problem I have with myself is if I make money, I don't find enjoyment in spending a ton of money on crap. So I would spend probably a higher percentage of it, but I would still be I would still be saving a little bit. And I find great enjoyment and satisfaction in saving, and I don't know why. It's like a personality trait. When I used to go as a kid, I would go trick or treating, and I would go around and I would get all of this candy. And I would get literally a pillow, like a pillow bag, like where you put your pillow in. I'd fill that thing up like halfway to three-quarters of the way full. A standard pillow bag, which is a lot of candy. Now, I thought it was cool to go get it and the process of getting the candy, but I never really ate much of the candy. I ate a little bit, but not really a ton. My brother would go with me and he would eat like a ton of candy, but I don't know, I never really ate that much candy. And I would collect all of it and I just never would eat it all. So I'm in the camp, like I enjoy the process of making money and saving money. And I do enjoy it to some extent with certain things. But then there's a whole bunch of things that I'm just like, I'll just update things that I need to update. Like if Windows go bad, I'll get new Windows. But I don't really keep up with the Joneses. I don't really care about that stuff. So I like saving, and it makes me feel good that I'm like stacking away for a potential future event that I don't know is coming. That's the way I view it. U.S. petroleum, crude SPR, refined products inventories fell by about 9 million barrels. That's month over month to 1,582 million barrels in February. But to me, this looks like an uptrend line from the 60s being broken to the downside, and maybe we're going to keep going lower for crude oil and petroleum products in inventory. April Chicago PMI plunged to 37.9 versus 45 estimate, and it was 41.4 prior, close to retesting lows of the November 2022. That does look pretty bad, and that is a function of the economy, manufacturing index. Ish. Oil market, we've got an upward revision by the EIA Gov with monthly data for February. Total U.S. consumption pegged now at almost 20 million barrels per day, up about 425,000 barrels per day from the estimate based on weekly data of 19.52. Both gasoline and diesel are revised upward. So U.S. total demand was up year on year in February. We've got U.S. home prices hit another all-time high in February, rising 6% over the last year. Affordability remains near record lows, and we are continuing to put in record home prices. What's going on here? Because we're short. Shanghai silver versus COMEX, $30 versus 27-ish. Again, silver's moving from west to east. We've got George Gammon here. Would you buy an asset you could never sell? Not an asset you couldn't sell in the next 10 years, an asset you could never sell. Yes, I would. And if that asset provided me returns that I couldn't find anywhere else and it was worth dumping that money into that asset, I would do it. So, for instance, if I purchased an asset and it returned 20% plus per year guaranteed, I would do it. So, if someone said, you could buy this asset, you could put money in it, and you could get a 25% dividend yield for the rest of your life, and I couldn't sell it. My next question would be, is the asset price able to fluctuate, and what would it be indexed to? Like, what would it be tied to? And if I was guaranteed a 25% dividend yield and it was against a commodity that was inflation sensitive, I probably would do it. And I would try to buy the asset at a very cheap location. But if I couldn't sell it, as long as I was guaranteed a dividend of 25%, and then the asset would go up and down, and it would be 25% of the value of the asset, I just couldn't sell it, I probably would do it, depending on what it was. We've got probably nothing. Real GDP versus bankruptcy filings. And this is kind of weird here. We do have a big disconnect between these two. And this is the real GDP versus bankruptcy filings. You can see that sometimes when the dark blue drops, which is your bankruptcy, your real GDP follows. We've had a pretty big move lower in in bankruptcy cases, Chapter 11. So it makes me think that real GDP could fall. That is a possibility here. We've got Suncor, which is a large oil company, Canadian large cap energy stocks coming out of a 17-year base, which is a beauty here. I totally agree, guys. This here is your 3-hump consolidation. It's one here, two, and then the third's a small one. The third one's coming up and it's not going to pull on back. So we've got a 3-hump consolidation. We've got a breakout here. And this could be the beginning of a very big move. And I'm sure people in government and the Federal Reserve are probably sweating right now because we're getting all these charts in oil that are breaking to the upside. Now, this one isn't as leveraged. It has quite a bit of leverage for a large cap. But there's other companies that have more leverage than this, and I'm playing the oil move with. And that's what we're sharing on the website. We're sharing on the website what those big leverage plays are to the commodity bull market here. So we've got JC Parrots. It says, as we enter the final day of April, these two assets have been positive every month so far in 2024. You can't say that about many other things out there. And this is the positive correlation here of the US dollar index and crude oil. It does look very similar in their charts. Now, what is weird is we had crude oil sell off today at the same time that we had rates and the dollar move up. Are we going to see a disconnect between crude oil and dollar and rates? I don't know, but right now they look pretty well linked together. Kevin Bambro says, moment of truth coming. How much central bank gold has been leased or lent out to bullion banks and sold rather than stored? The short squeeze from a true lack of physical to meet SDRs or other gold certificates and silver certificates could prove to be historic. And I've read a whole bunch about this, gold rehypothecation and all this other stuff. This very well could be true, and we'll see if there's a physical shortage that does impact all this. I don't know. We'll see. Gold Silver HQ says the entire financial system, really honestly, people, if you don't get it already, you're just done. It's crumbling around us right now, says Gregory Manarino. Residential market in Michigan is insane. My wife is flipping a condo under contract without listing for 22% over the highest comp. Full appraisal waiver, no inspection. A good friend of mine listed 5 homes last week, 85 showings, all under contract over the weekend. Price from $300,000 to $1 million. The cheapest one, the 300,000 range, sold 20% over asking. Talked to another agent who hosted an open house yesterday. 65 people came through for a $295,000 house. With rates at 7.5%, this is nuts. When rates drop, prices are going to the moon. Yeah, if they do drop. And that's the conundrum that the Federal Reserve is in. We've got a tight housing market. We've got homes that are selling quickly, at least in a lot of the markets that might not be oversaturated markets or hype markets. The hyped up markets like Phoenix perhaps, or Austin, or maybe even Nashville, some of those are kind of overhyped. Denver too gets kind of hyped up. But if they lower rates, guys, we got a ton of people that want to buy. I know personally a bunch of people that want to buy. The only thing holding them back is the affordability. That's the only thing. There's a gigantic amount of people underneath this market where if they lower rates, you're going to go right into a ton of buyers. So I don't know how they're going to stop this. Because if you lose the economy, they're going to lower rates and just go right into a whole bunch of buyers there. At least that's my opinion. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And we'll catch you later. This is Finding Value.